Hey everyone, welcome back to another video. Today I want to go over what I believe are the top 5 mistakes that one can make on a choppy, low volume intraday trading range like we have today in the market. I'm not going to talk too much about the longer term market context other than to say longer term I am bullish, shorter term I am neutral to maybe slightly bullish. I just want to hop right in to talk about the 5 mistakes that I've been thinking about on the last couple of trading sessions because the last couple of trading sessions have been pretty dang choppy. This is the market today, and yeah, you have green candle, red candle, green candle, red candle. You have long tails, you have long wicks, mixed overlapping candles. This is a directionless market that's going absolutely nowhere on very light volume, and it's just chopping all over the place. Yeah, days like today, regardless of the longer term market context, if you are trying to make trades like this or trades on a day like this, you have to be extremely selective, very selective, absolutely only the best. And the thing is, on days like today, there are going to be less trading opportunities because there's no market momentum or tailwind to boost stocks. So there's just going to be less prospects that pop up on an intraday basis. And so the days like today where there's just nothing happening, the best thing to do is just don't trade. Don't force any crappy trades, even mediocre or what trades look good, because while the trade might initially look good and it has some initial movement, when the market is just doing a whole lot of nothing, eventually that move in the stock is likely going to just pause and sort of dwindle out, and then it just sort of compresses and doesn't really do anything. You don't want to get trapped in trades like that. And even if you try to buy pullbacks on days like today, it just doesn't really work out too well because you'll get a pullback and you'll be like, oh, this is a great look, the pullback alert triggered. And then you buy, and then the stock keeps drifting lower or it just doesn't really do anything. And then you're stuck wondering, well, what do I do with this trade? Do I hold it overnight? Yada, yada, yada. I know I said I'm going to skip the longer term context, but the longer term context, it really is important. Just know that we've had a very, very, very bullish market the last few months. And we've had a lot of days where we have really nice movement. So why force trades on a day where nothing is happening in the market when you know that all you have to do is just wait for a nice day to come? It will come eventually. It may not be today, it might not be tomorrow, but it will come. And on those days, there will be a lot of good stocks you can trade and you can be more aggressive on those days. You don't want to waste away the nice gains you've had on garbage trading conditions like this, because not only will it hurt your account, but it will hurt your psyche, your mental state. The best trade is no trade on a day like today. So let's get right into the top 5 mistakes. So maybe it's obvious, maybe it's not, but the number one mistake is forcing trades or taking a bunch of mediocre trades. Really, you should be able to, with experience and time and study, learn that this is not a high probability trading environment. I've already listed a couple of reasons why on an intraday basis. One, mixed overlapping candles, long tails, long wicks, low volume, no direction, can't stay above VWAP, can't stay below VWAP. When you look at this, you have to look at, okay, how about this? When the market is moving and it's open on the day, right? And you're trying to figure out what the direction of the market is. Let's say someone had a gun pointed at your head and say, tell me, where is this market going next in the next 15 minutes? Would you seriously have any idea where this is going? Probably not. Your answer might be, well, I think it might chop around, and your answer is probably correct. But you don't have a sense of the direction it's going to be moving in because there's no sustained movement on the upside or the downside. Compare that with the moves we had Thursday and Friday of last week, where sure, it was still a little bit wavy or choppy perhaps. There was a directional bias to it and the price action was a lot cleaner, and we had pockets of heavy volume, especially on Friday, right? This was a really nice move to the upside and we had heavy volume. A lot easier to predict where this is going, not easy to predict where this is going. And even yesterday, right, we started off, we sold off, found support at the low from the Friday or the previous trading session, and then we had a nice bounce off of that. This stretch here was a really nice move. And then it stopped, and then we just chopped around. So what I'm trying to say is when you look at a chart like this and you have no idea where it's going, that's a good sign. Just don't trade. Seriously, don't trade. Another sign is when you're flipping through charts and you're going through your scanners or your lists or whatever, and there's just not a lot of prospects. That's also a sign that says don't trade. Or if you're going to trade, trade very small size and do not make a lot of trades because you're just not going to get a lot out of any trade that you make. So that's number one. It's forcing trades in garbage, low probability trading environments. And by the way, if you're still trying to learn how to read price action, or you're struggling to be able to identify like what's a strong market move versus a not strong market move, well, improve that by studying price action, reading through the Real Day Trading Wiki. If you remember in one option, you can go through Pete's articles and study his lessons on price action, or just watch his YouTube videos. By the way, those are all free. There's nearly 1,000 of them, and if you watch all of them, I guarantee you, you will know how to read price action after. You will have a mini Pete in your head that talks to you as the trading day goes on, which maybe sounds weird, but for me it helps because I hear him say, this is garbage, don't trade this, or look at this, mixed overlapping candles, that's a sign to trim your trade count. But if you're struggling to read price action, highly recommend using LRSI on a 5-minute chart, and just really across any time frame, honestly, but it will give you a clear indication of when you have a strong trend versus when you don't. When you have a strong trend, you're going to see LRSI stick to the top here, or perhaps in a bullish trend, it'll stick to the upside. If it's a stronger move to the downside with follow through and sustained movement, it'll stick to the down or the lower end of this little box. Now, if we go to Friday, right, this was a nice session, right? See how long it stuck near the top here? Yes, it pulled back a bit because the market pulled back, then it dipped around, and then it hugged the high again, and then it pulled back as there was profit taking into the end of the day. That's a good sign because that shows you that the trend is strong because it's able to hug the top. But when it doesn't, and it looks like a freaking roller coaster like this, and it's going all over the place, this is a warning sign. This is saying, this is garbage. Don't trade here. Keep it very light if you have something you're going to trade. So, number one, don't force trades. Number two, let's say you are going to make a trade because you found a stock that looks really good and it has really nice D1 breakout, has really consistent price action to the upside on a 5-minute chart, and you're like, oh yeah, I want to go long this stock because it has, it's got all of its momentum handled on its side. So let's take a look at something. I think it was CVNA. So here's the daily chart. This isn't really an amazing daily chart. Sure, the stock has some support at the 100-day moving average, AVWAP, the 50 SMA, perhaps the 80 MA, but it's been pretty choppy over the last month or so, right? Kind of stuck in this range here. So personally, I would rather wait for a breakout here. But you could argue that maybe it's an okay day trade, right? Heavy volume today. Let's go to the 5-minute chart. So here's the 5-minute chart. Now, right away, if you're looking at this move up to, let's say, this point, this is not the strongest move in the world. Why is that? You can see these candles are long. They have tails, they have wicks. They are mixed overlapping candles with bearish engulfing candles. So while there is a nice directional bias to the upside, it's choppy. So your expectation should be, I should expect two-sided movement in this. Now, let's say you come in and you're looking at this and you just, at this point, let's say it's 11:30. So where is the market at 11:30? Oh, look, the market is above VWAP. You're like, all right, I was patient. I waited 45 minutes at the open. I was going through charts. This is the best chart I've seen all day. Oh, the market is going to stay above VWAP here. This is going to be a benign bearish 1OP cycle, and we're going to go back up and make a new all-time high. Oh yeah, I'm going long right now. Well, guess what? You bought the high of the day on a day when there's no market tailwind, and you have no evidence that this move above VWAP is going to hold and get follow through. And most importantly, it's a choppy day, and you should expect that because the volume is light. the price movement up to this point is garbage. Mixed overlapping candles with long wicks and tails. So buying here, especially when you know the price action in the stock has been choppy, is a terrible, terrible idea. Because guess what? You enter here and the door gets slammed in your face immediately. Oh no. Oh, here we go again. I bought the high of the day. Now I'm sitting here wondering, what do I do? Do I exit the trade now? Do I hold on to it? Do I lean on the daily chart because, well, the daily chart is okay. I have a few levels of support here. Well, sure, you could perhaps justify leaning on the daily, but the thing is, you should have had a better entry point. And the way you can do that, especially when you recognize the move is choppy and you recognize the market is choppy, is just wait to see if you get a pullback. What does an actual move down look like? Had you set an HA reversal alert like I had here, right, you would have gotten that alert. I don't really remember when I set this exactly, but let's say it was right here. Well, if you entered here, you would have had a nice move up here. And perhaps if you were just day trading it, right, you would enter here and then you would exit here on this close because, well, that's a nice bearish engulfing candle. And you had a bearish hammer before that. So, and again, you don't really have tailwind in the market, so you have to be quick and nimble with day trades. And I'm just saying day trades. I'm not saying swing trades. I'm just talking about day trades. So if you entered here, you could have gotten a quick little gain. But let's say you set the alert again and you waited for here, right? Right, let's say you waited after this pullback started, you had these flat top red candles, and then you waited for this bullish flat bottom HA reversal candle. Whoops, this is not what I was trying to do. So let's say you waited for this. Well, by the time you get that alert, you can see, oh, the stock is trying to break up a VWAP, but this is a, well, decent sized pullback, and you're below VWAP, meaning this support, which should be support, VWAP, failed. That's a sign that maybe you should be careful with this. Perhaps there are better stocks out there. So I don't want to get too much into how to handle these pullbacks on a day like today because I'll get to that in another point. But my main point for mistake number 2 is do not buy the high of the day, especially on choppy market days like today. It's just probably not going to work out, especially when you can tell the price action up to that point has been really choppy. There's no reason to just run in and rush into a trade here. Okay, number 3, breakouts that fail or intraday moves perhaps above resistance levels that look good and you buy it and then all of a sudden it's not good. Well, let's look at an example yesterday. Let's take a look at Google and we'll look at its daily chart. Google announced earnings last week, had a pretty big negative reaction to the downside, found a little bit of support at the 50 SMA, and let's say you had an alert set at the top of this candle here so that you'd be alerted when this goes into the gap down, right? Yesterday you get that earnings and be like, oh yeah, this looks great. Let's go ahead and try to trade it. So let's go to the 5-minute chart. And by the way, I'm going to remove all of the SMAs because I realize this is kind of cluttering the chart a bit. If you're wondering why I even have that up on a 5-minute chart, I don't actually use the SMAs on a 5-minute basis. I'm just on my laptop right now, so I switch back and forth between the daily chart and the 5-minute chart. So I've learned to ignore them, but I recognize that it is not so pleasant to look at. So I'm going to make this a little cleaner for the sake of this video. So anyways, let's say yesterday you were wanting to go long Google because you got that alert that I went into the gap, right? And you know, don't trade the first 30, 45 minutes of the market day, right? Because you need to wait to see what is the market going to do. Well, first of all, right, yesterday, this is yesterday's price action, market sold off to start the day. Okay, so this is a great time to look for stocks that have relative strength. Lo and behold, look what has relative strength. It's Google, and it has a lot of relative strength. It's moving higher when the market is moving down. Let's put on the SPY overlay here so you can really see that. Look at this. Market down, down, down. What is the stock doing? It is moving higher. And on top of that, it's actually, well, it's moving higher on heavy volume. Sure, this is a choppy move, but look at the market. The market's selling off. This thing is actually gaining here. So that's awesome. So you're watching this and you're like, okay, this is great. Once the market finds support, I'm going to go long on this thing. So the market finds support, but by the time the market finds support and starts to move higher, oh no, look at Google. Now all of a sudden it's relatively weak. Look at this. Relative strength goes down below 0. All right, so now you say, well, good thing I didn't go long here because I would have been trapped here. Now I'm going to wait for it to break above VWAP. Then I'll go long. Okay, that's a smarter plan. Well, you set an alert for a VWAP break, right? You get it here, and you go long immediately. Well, first of all, this is not a good time to go long. Why? Well, market aside, which, by the way, after this support was found yesterday, the market kind of just chopped around. I think it's this 11 or 115 candle that broke above VWAP. Yeah, 110, 115. So right around here, right? Okay, we get a nice move up in the market from the low, and then we just kind of chop around. So the market's not really doing a whole lot. So let's remove the market overlay for a second. The clues here that this was not a good time to go long. 1. Just because you have one close above a level of resistance does not mean you have a breakout that is going to get follow through. I have a video on breakouts. It should be the video I uploaded just before this video, so please watch that if you haven't and you're struggling with how to trade breakouts. But the key here is that when this sold off, right, this was selling off when the market was moving up. So that's one warning sign. This thing has a good amount of relative weakness all of a sudden. Number 2, the sell-off was decent, meaning this is a decent amount of retracement into this long green candle. We sure maybe held just below the halfway point of this long green candle, but the thing that irks me about this move is that this selling happened when the market was starting to find support. Or maybe it wasn't exactly selling when the market was starting to rise, but I think it was around maybe 1040 yesterday or so that the market started moving higher, and Google did not participate. So that's another sign that, well, maybe buyers aren't so aggressive here, because you would expect with relative strength like this to start when the market was dropping that this should participate with it, but it didn't. It couldn't get off the deck until it did. But this clue right here, this decent retracement, and the fact that the market was moving up and this was stuck down here, those were 2 big warning signs. Number 3, well, you would expect VWAP to hold, right? If you're above it, VWAP's going to be support. If you're below it, it's going to be resistance. So you have to respect that boundary, and you should assume resistance will hold, support will hold. So just because you close once doesn't mean it's off to the races, right? Because, well, we already talked about the preceding move that came before this little breakout here, but you have to wait for follow through, right? If this close here, you had another long-ish candle and then another green candle that was adding to those gains, or maybe compressed a bit and then kept adding, that's nice because that tells you that not only was it able to close above VWAP, but buyers are interested above VWAP. What happened instead is you had an immediate bearish engulfing candle. So if you went long here because you were like, oh, this is a great time to go long, well, you missed the clues here that were warning you that this might not be so great, and you didn't wait for follow through on this breakout. And, well, the market, we already know, it's a little bit of two-sided movement, and it's starting to chop around. Low volume, not really anything going on. You really need to have stronger confirmation on choppy trading days like yesterday and today, because you just don't know what's going to happen. So you should wait to see for a breakout above. And personally, if I'm looking at a stock I'm interested in and it goes below VWAP and then I get alerted that it goes back above VWAP, just the fact that it dipped below VWAP, and of course this depends on the market context and whatnot, but generally speaking, if a stock dips below VWAP, or let's say the prior day's high when it was above it, and it goes back above that level of resistance, I want to confirm that move, meaning I get follow through, or, and this is my personal what I wait for a retest of support at this resistance level, which should now be support once you close above it, because that would tell me that sellers tried to push it back down below this level, but buyers were like, nope, I want to buy it here. And then they buy and support the stock and they buy. That would tell me, well, I have more confidence in this move because sellers try to push it down, but buyers are like, no. So when you get these moves that dip below VWAP and then they go back above, wait for that retest for support before you just jump in and go long. Just because you were patient to wait for a dip or whatever doesn't mean that the dip's going to get follow through. So just be aware of that. And also, back to point one, you don't have to force trades ever, especially on lower probability trading days like yesterday and today. So just confirm your breakouts. Watch for follow through. Make sure there's support. Okay, number 4 is not having a plan for the trade. So let's say, unfortunately, yesterday you went long on Google right here because you're like, oh, hey, look, VWAP breakout. And then you entered here, and then, of course, it immediately pulls back because that's just always what happens, right? Well, first of all, work on your entries. I know that's an annoying statement, but you have to take in the market context, the stock context, all of these things. It takes time to get good at, but you will improve with it over time. It takes time. You need experience. There's a reason Harry talks about it takes 2 years' time in the wiki. A lot of that is building your mindset and undoing all the bad ways we think about trading. But another part of that is you just need experience trading. And you can learn things, but you won't actually internalize and truly understand things until you have more active experience. So, of course, improve your entries, but the thing is, you need to have a plan for every trade you go in. Meaning, let's say you were looking at Google and you were like, oh, well, I like the fact that it's trying to fill in this gap, so I'm going to trade it. If that was your plan, well, then you kind of failed before you even entered, because you need to have a plan in place for what's my stop. Am I going to lean on the daily chart for this? Meaning, is the stock strong enough to support me staying long overnight if I don't get the move that I want? You need to decide that before you enter, not after, before. What do I mean by before? I mean, you don't just come in and make the trade and then it pulls back and you're like, oh, actually, I'm going to swing this because I know I'm supposed to lean on the daily chart. Well, your mistake is you shouldn't just be leaning on the daily chart because you had a bad entry. That needs to be part of your game plan, and you need to be honest about it before you enter and make the trade. So it would be fine if that was your premise, that you'd hold because you like the daily chart breakout into the gap and you're willing to hold based on some level of support you've defined. But you needed to make that decision before you enter, not after because the trade has gone bad or whatever. You need to be honest with yourself. If it's going to be a day trade, that's fine. Just be upfront about it. You don't want to be so back and forth and having to lean on the daily chart as a way to justify your bad entries. Make that plan beforehand. So if you entered here on Google, well, I guess you could have held for the rest of the day to see how it closed. But, well, I guess if you were going to day trade it, you would have taken a loss. And sure, it sucks. But hey, at least you followed your plan if you were just saying you're going to day trade it. Not all people can do that. So, number 4, really make sure you have a plan for the trade. Be honest with yourself. Is it just a day trade? That's okay if it is. Are you willing to lean on the daily chart? Okay, then you need to define your level of support, what you're going to lean on, and abide by that based on how the daily chart candle for the day closes and whatnot. Make that decision beforehand, not after a trade goes poorly that you meant as an intraday trade that you're suddenly going to swing. Okay, and number 5, last but not least, not setting alerts. And this is really, really important on a day like today, because when you're just not getting movement on a day like today, number 1, you shouldn't be making trades. We've discussed that. But number 2, the best thing you can do is just go through all of your scanners, all of your lists, and just click on stocks and see which stocks are strong, which are holding up well, which ones have interesting levels of a breakout you might be interested in at buying. You need to be going through these charts and setting those alerts. Like for example, on Palantir, here's a big ass post earnings release, very positive reaction. I would love to buy a dip on this thing. In fact, I'm going to go ahead and set an LRSI alert where I want LRSI on the 1 hour chart to dip below 0.20 and then to go back above it. That way I can evaluate what the pullback looks like. These are the kinds of things you need to be doing on a day like today when there's no market action because, well, once there finally is market action, you're going to be getting all kinds of alerts and trades delivered to you on a silver platter. And that's exactly what you want, because when those days come where the market is making an aggressive move, you don't have to be scrambling going through all these stocks because you'll have already done your homework. Those trades that you set alerts on, it will pay off and you will get those alerts and you'll be happy you did. Like here's DoorDash. I know earnings are soon for this and so is Uber, so I wouldn't trade it. This is a nice D1 breakout, but let's wait for earnings and see if this alert triggers. What else was I going to look at? I don't know. ABT, Abbott. Is there anything here? No. It's had a really big move up since the end of last year. If it breaks out above this high, I want to know about it. See how it takes 2 seconds to set this alert? I just click the top of this candle and then I'm off to the next chart. That's all you got to do and you'll be happy you set those alerts. Or maybe you'll look at something like DAL and you're like, oh, I want to buy a dip on this thing or something. And then you can set a more specific alert in Option Stalker Pro. Or even if you don't have these kinds of custom alerts that let you set super specific types of alerts based on whatever indicator you like to use, just set an alert at the bottom of one of these candles. Like, oh, when it goes and touches the low again for support here, I want to know about it because I want to see if this support is going to hold. That's the kind of shit you should be doing on a day like today. So, to recap, top 5 mistakes on a day like today. Number 1, forcing trades. Don't do that when the market's chopping around. Number 2, buying the high of the day. It should go without saying, but on a choppy day, you'd have to respect and expect retracements because it's likely to happen when you don't have a market tailwind and when you have a market that's just chopping around. Number 3, buying breakouts that fail. Watch my previous video I uploaded on this, but especially for choppy days, you really need to confirm those intraday breakouts. Number 4, not having a plan for the trade. It's okay if you're going to lean on the daily chart for a trade you enter, but be honest with it and make that decision before you enter, not after you enter. Yes, you can lean on the daily chart if you have a strong stock, but make that plan beforehand, not after when you're trying to save your ass for a shitty entry. And number 5, not setting alerts. You will be thanking yourself on a good trading day once, if you've been going through all those alerts, charts and setting those alerts, because those trades will come automatically to you and you'll have already done all the work on the boring ass days like we've had today. Okay, that's enough talk for me. I hope this video is helpful. I will see you guys later.